do not panic. Now, I know that's easy for me to say because 90% of your altcoins are still bleeding right now, but what if I told you that all of this madness has actually happened before? Remember, Solana actually crashed over 80% and everyone called it dead. But then it did a 280x. Or Gala, for example, was down at nearly 80% and then it ripped 130x. History doesn't always repeat, my friend, but it definitely does rhyme. And right now, while the market is just simply drowning in fear, the conditions are brewing for what comes next. And in this video, I'm not going to give you any hopium. What I'm going to do is give you the facts. What we'll do first is break down exactly why everyone is so terrified. Next, we'll zoom out and look at the one thing that actually moves this market and what it's doing right now. Third, we'll uncover the psychological warfare being waged on you and why this fear is exactly what big money needs to see before a massive move. And finally, we're going to do a conviction check on all of your altcoins with some of the biggest news you may have missed on coins like HBAR, Link, Arrow, Solana, and trust me, many more. So let's begin. So look, I get it. It's easy to feel like the sky is falling right now because you're even hearing the most bullish of people in this market, or once bullish at least, now pretty much saying the bull market might actually be over. And I know, their reasoning sounds pretty convincing, right? They'll tell you things like, hey, altcoins are down 90% right now, with most of them bleeding more than 30% from their 2024 highs. Or they'll say, for example, institutions, well, they took over in a bad way and killed all that positive price volatility. All that meme coins poisoned the space and drained all the capital away from the quality projects. For example, they'll say Trump is playing mind games, high interest rates are a ball and chain we can't shake, or I think the cherry on top out of all of this is that they'll claim retail, you and I, for example, have been dragged through the mud emotionally for so long, there is no way anyone wants to come back into the space and get a piece of the pie if things start to move. But the question we need to be asking is, what if, all right, all of these conclusions, all of these opinions are based more on emotion and not on facts? What if this is all retrospective thinking, not prospective thinking? What I mean is, what if this is just emotions from the last 3 years, not critical thinking based on what is likely to come? So yes, let's look at the evidence, because admittedly altcoins are down and some are down quite a lot. Have a look at this. This chart perfectly, I think, illustrates the sentiment and why it is so bearish right now, even while Bitcoin is holding so strong. It's a basket of the top 50 altcoins, and as it stands right now, they are trading well below where they were after the FTX crash in 2022. Now, we can actually see a similar story with the advanced decline index as well. So what this chart does is it shows whether, more coins are closing higher or lower over a period of time. If we have a look at the top 100 altcoins, it's been pretty bearish since late 2021. There's really been no signs of life at all. It not only feels, but actually based on data looks like we have been in a bear market for altcoins over the last 3 years after all. The fear is real. The pain is real, and the bears are telling you to get out now before it gets worse. Let's just be real. This is definitely what's happening. But my friend, look, we cannot expect huge, life-changing returns to come and not be prepared to be down in proportion to those potential gains because this market is just so volatile. And that is the price of admission, I think, in crypto. I understand people don't want to hear that, but it is the truth. And the good part is that this is actually normal in this kind of market. It stings and it hurts. I understand that. A lot of us are actually in the same position, as you'll soon see here, with a literal expert in one moment. But let's stop looking at the price for 1 second and ask the most important questions. What actually moves the crypto market? Now, I can tell you, it's not tweets as much as they are recently. It's not sentiment, and it's not memes. The one thing that actually moves crypto is liquidity. And liquidity is actually indeed loosening. We're coming to an end of what's called the tightening cycle, the contractionary period in these monetary booms and busts. We are seeing the first green shoots of monetary expansion right now, because these blue bars, they represent economic activity on the global scale. It's the global business cycle. And we've just seen the biggest uptick since 2020, dwarfing any of the two smaller rallies we saw in early and late 2024, which, as many of you know from watching this channel, perfectly coincide, so they match up with the two prior altcoin pumps. Is this a coincidence? Well, I definitely do not think so, because all of that is happening at the same time the FCIG, right, the Financial Conditions Index, is running hard, and at this rate, the US business cycle should be able to cross into official expansion very soon. And all at the same time, the Fed's actually dropping rates and ending QT. And while they might not announce a full-blown QE just yet, they're likely to begin what's called stealth QE. But anyway, it doesn't really matter at the end of the day. The effect is the same either situation. We're just going to have more money entering the system. And I do think a lot of this new money could actually come from gold. Now, we all know gold went like parabolic, literally, recently, all right? Tearing well over $4,000, well into 4,400 an ounce territory. But why? Well, because of geopolitical tensions, particularly with China. But now it does seem that those tensions are easing, and as a consequence, gold is now selling off. And if you ask me, this is a microcosm of what's likely to come, because when stability returns to market, money flows out of safe assets like gold and moves its way down the risk curve into stocks, and yes, of course, in the Bitcoin and the rest of crypto. But look, if you are thinking right now, well, current macro looks good, but what about retail? All right, where are they? No one's body buying right now. Well, I think Ash from Market Mobster puts it so perfectly in this tweet. I'm just going to show you exactly what he said here. He says, everyone keeps talking about retail. Where are they? What are they doing? Well, he says, they're doing what they've always done. They're waiting for permission. Retail will return to the market when it feels safe. When their made at work tells them, for example, did you see Bitcoin's up again? Have you seen Dogecoin? And so on. Humans don't change, only the narrative does. And I couldn't agree with Ash more. Because do you know what was happening with gold when it was hitting those all-time highs? Yeah, there were huge lines outside of bullion dealers all around the world. Guys, people were literally lining up to buy the absolute top. At the same time, mind you, this is all public information, the RSI on a monthly chart was a screaming 91. And you're like thinking, why? Why would anyone have done that? All right, because guys, it's the mass market. The mass market doesn't buy based on technicals or fundamentals or when things are oversold. They don't buy based on fear. They invest based on emotion, buying with FOMO and greed, and of course, selling with fear and uncertainty. And that brings me to my most important point, I think, of this whole entire picture, the psychological game. Your emotions are 100% required to be manipulated for this market to actually work. And I want you to think about it with me here. If all of retail investors believe the bull market was like definitely going to happen, chances are it's not going to happen, okay? But if all of retail investors believe the cycle's over and won't happen, it's almost more likely to happen. And if you remember, I actually made a video at the start of October, and I told you guys to be very, very careful because everyone was kind of like demanding from the market, right? Give us October. We deserve October because, well, history's, shown October's quite bullish. Now, that to me is always a pretty worrying sign because that's exactly how market makers take your money. Again, everyone thinking a certain way, market makers like to do the opposite of that. Then we might possibly see some potential downside, but I do think we will see October end positive. So make sure you are subscribed with that bell turned on because obviously you don't want to miss any of these calls in the future. But let's just peel back the onion really quickly. What actually causes this? Why is this the case, right? Well, it's just because big money does need a lot of small money to buy from them at the highs. You can kind of think of crypto or any markets as like an exchange of hands, right? For a whale to sell their Bitcoin at $300,000, somebody else magically has to believe Bitcoin is a good and valuable buy at $300,000. So how do you create the person that's willing to buy Bitcoin at obviously an overvaluated price, at least from where it is right now? Or you've got to drag them through the mud. What you have to do, from my understanding, is you've got to beat them down emotionally for months, even years, and make them feel hopeless. The reason why is that when their portfolio finally turns green again and then starts making more and more and more money every single day, they begin not to think very logically. They think emotionally, because what you've done is converted a calculated investor into now someone who's more of a revenge trader, someone who just simply forgets all about risk and only cares about making back what they lost and then some, right? It's a classic trick, and this has worked over the course of time with even the world's smartest people. For example, Isaac Newton had this actually happen to him. Check out this post from Michael. He's that fund manager I mentioned earlier on in the video with years of institutional crypto experience. He says, I am currently down 60% on the altcoin portfolio. The thing is, it will be terrible for a long time, and then it will be great in a short period of time. If at the low, I'm down 60% on the altcoin portfolio and the upside is a 20 to 50x, I'm fine with that. You can't have a 10x on your portfolio without drawdowns of 50 to 60%. And this, in my opinion, is the mindset of smart money. You must remember, please, now is the most important time to focus. You've got to focus on what you own, ensuring that you have conviction in the altcoins you own. This is genuinely the magic situation where people in the future will say, oh, yeah, he got lucky or she got lucky, right? This is where it actually comes from. It's now when you need to focus on your exit plan, while everyone around you, and even in the comments down below, mind you, will tell you, let's just make some money first. Let's get back to break even. Let's just focus one day at a time. But no, you need to focus. You need to plan ahead. It's now when you put the work in, so you can be a lot less stressed and emotional and far more clinical when the market starts to heat up. Speaking of conviction and emotion, here is some of the latest news on some of the biggest altcoins in crypto. So if you own Chainlink, Aave, Hedera, Injective, Solana, Arrow, XRP, Sai, AVAX, Ondo, Plume, Pith, my God, that list never seemed to end. You've got to listen up. There's been some really, really big news. Oh, and by the way as well, if you are looking to buy any of those coins, make sure you check out Femex with the link below, because we're running a very limited time deal to give back to the community after those nasty liquidations we saw a few weeks back. If you deposit $100, you get back $25, all the way up to $10,000, which will get you back $3,000 cash in hand. No gimmicks, no strings attached, just as simple as getting money back to you. Plus, if you do deposit and join our free community in level 0, you can earn a bunch of more rewards as well. I'll leave the links down below for you guys. Let's start with one of crypto's founding fathers, Chainlink. S&P Global, the world's largest provider of credit ratings, are now collaborating with Chainlink to deliver their stablecoin stability assessments directly on-chain. This is another massive institutional validation for Chainlink's data infrastructure, but a huge step overall as well for tokenization and crypto. Now for Hedera, Aave, and Chainlink holders, the Bank of England has launched a DLT Innovation Challenge to test settling tokenized central bank money. Now, the challenge from the Bank of England clearly says, we want to make sure that those working in this space can showcase their work and expertise to the central banking community. Obviously, this is very, very exciting, as the intention here is to put HBAR, Aave, and Chainlink in front and center to governments and major central banks. XRP holders, this one is quite big as well. What's happened is Ripple has helped launch a new $1 billion crypto treasury called Evernorth, which plans to buy and hold large amounts of XRP. Now, the company is also planning to use XRP for yield strategies as well and support the XRP ledger's infrastructure. Ultimately, this is just going to simply help create massive institutional demand for XRP. For the Injective community, well, what's happened here? They've launched a community buyback program recently. 21 shares just filed for the third Injective ETF in 3 months, and Pineapple Financial made an open market purchase worth $9 million for their long-term treasury. Solana holders, you guys are lucky because the big money just keeps on coming. Grayscale is now awaiting approval to offer staking on its Solana ETP, which would be the first in the US and a massive unlock for Solana. Not to mention, but Fidelity also added Solana's trading across its entire suite of products for both retail and institutional clients. Aerodrome. Guys, massive news here as well. They've now bought back over 150 million Aero tokens from the new buyback model, which is obviously showing a massive commitment to long-term growth and governance of the Aero token. Just to give you some perspective at how incredible this is, Aerodrome have basically locked up $130 million worth of the Aero tokens, gone, kapoof, all in one big chunk. Ondo Finance continues to lead the charge in the RWA space. What they've done is held a major networking event with Chainlink during the DC FinTech Week, putting them directly in front of policymakers, which is important for what they're actually aiming for. They also went live on blockchain.com's marketplace, which now offers Ondo's 100 plus tokenized products to all of their users. And let's not forget as well, those newly tokenized products, well, they're growing at a pretty rapid rate. Sai Network is also making some pretty big moves as well. Don't want to forget about these guys, right? Through the Brevin Howard and Nomura-backed platform, which is KO, both BlackRock's USD liquidity fund and the Brevin Howard master fund are now being tokenized on the Sai Network. Not only that as well, but Sai flipped Polygon, Sui, and Base for active users in September, now ranking within the top 8 in crypto. Out of this whole list, I think AVAX has some of the biggest and best news because the S&P Dow Jones Indices and Denari have launched the S&P Digital Markets 50 Index, combining 15 major cryptocurrencies with 35 US crypto-linked equities into one benchmark, and the index is going to be tokenized on-chain using Avalanche. I think, again, this is huge because I believe this is where institutional capital will flow into crypto first, right? Buying broadly rather than trying to aim at an individual coin's ETF. The SEC also approved Plume as an official transfer agent, which allows them to legally migrate off-chain securities into tokenized products. This is a huge regulatory hurdle, and for a coin this small, I do think it's a massive win. And finally, Pith Network. Now, these guys have just recently partnered with Kalshi, which is the first US CFTC regulated exchange for event contracts and prediction markets. Pith is going to be supplying their data to over 100 chains, a massive expansion of their Oracle use cases, which kind of explains why they've jumped to $2 trillion in total traded volume so fast. All right, so let's briefly recap. The market's terrified. Sentiment is in the gutter. 90% of altcoins are down, and the bears are screaming that the cycle is over. But at that exact same time, the global liquidity taps are indeed turning back on. The business cycle is entering into expansion. Gold has possibly topped out. Big money is using this fear to accumulate, and the fundamental development and institutional adoption across the entire industry has not slowed down for a single second. Now this, my friend, is the opportunity because, as I explained, fear is a feature of markets, not a bug. It's designed to kind of shake you out right before the real move begins, and unfortunately, it's really tested everyone's patience this cycle. So the question I want to ask you, what are you going to do? I'd love to hear your thoughts down below. And with that said, take good care of yourselves out there. I'll talk to you tomorrow. Bye-bye.